Good morning, everybody. Good morning, everyone. Can you all hear me?
Yeah.
All right. Good morning,
Yes,
everyone.
I hear you.
Welcome again to another edition, or actually the 17th edition of the Alpha Morgan Quarterly Wealth and Economic Review with Bismarck Rwani, where we review local and global economic events, policies, market happenings, and everything happening generally in the economy, providing clarity for what they mean for business and investment decisions. My name is Doyin Anyehe. I'm an executive director with Alpha Morgan, and I'll be your anchor for today. But before we start, we take a moment to commiserate with our colleagues at United Capital on the loss of our fellow colleagues in the tragic fire accident that occurred on September 16, 2025. We extend our deep condolences to United Capital, to their families and loved ones, and to the nation as a whole. And we pray that God will comfort everyone, strengthen everyone, and that by his mercies we will not experience such again in Jesus' name. On a positive note, a number of economic indicators have been on the up and up since we last met in July. Things seem to be improving. We've seen a rebasing of the GDP to about 372 trillion and a Q2 growth of 4.23% year on year compared with last year, indicating stronger performance and acceleration in the GDP. We've also seen deceleration in our inflation numbers to 20.12%. And then exchange rate continues to improve, with Naira gaining strength in the market against the backdrop of improved revenues. And then yesterday we saw at the MPC meeting, the CBN dropped the MPR to 27% from 27.5%, the very first drop in a long time. And the CBN reduced CRR for commercial banks to 45%, merchant banks 16%. And the asymmetric corridor was also amended to plus minus 250 as against the previous minus 100 plus 500. So it is clear that we are on the recovery, but are we out of the woods? Is it El Dorado? Is it yet El Dorado? We don't know. What do all these mean for the average Nigeria, for the investor, for the entrepreneur, the business person? What does it all mean? These are the questions that we have our very special speaker, Bismarck Rwani, today on the webinar to help address. You're welcome, sir. We are
Thank you.
grateful to have you here to help us shed light on all of these issues. Mr. Bismarck Rwani is the Managing Director and Chief Executive of Financial Derivatives Company Limited. He's an erudite economist and globally and worldwide renowned. You're welcome once again, sir. We also
Thank you.
have with us our host, Ade Buraimo, who will come in after Bismarck's presentation. Ade Buraimo is the Managing Director of Alpha Morgan Bank. You're welcome, sir. We also have George Imadi, a director with Alpha Morgan, who will give us a vote of thanks at the end of the program. We encourage our participants to please put your questions, type in your questions in the Q&A section, and we will take those questions at the end of Bismarck's presentation, and hopefully we'll get to as many as we can. So you're all welcome once again, and let us start. Over to you, sir. You're welcome.
Good morning, and thank you for having me. Again, condolences to United Capital and the FIRS people who lost their lives in that tragic incident. Now, last time we met, the world was a different place altogether. We saw oil prices dropping. We saw the price of gold increasing. And we saw the dollar actually faltering at the same time. The Nigerian stock market was actually rallying, and so many things were based on sentiment rather than on evidence-based analysis. So having said that, where are we today? So we are going to start from where we were and where we are now and what is likely to happen as we go along. So first and foremost, some global and regional developments. We've moved from where we can say there was global inflationary pressure to actually a reduction in inflationary pressures. The only country amongst the leading countries that is having an inflationary static situation is the United Kingdom. So the Bank of England maintains status quo. The South African Reserve Bank, again, held at 7% and have brought the inflation down to 3.3%. The German central bank held at 2.15 and cautioned on global uncertainty. Last time we met, the problem with Ukraine and Russia was at its peak, and Donald Trump had met with Putin in Alaska. Everything was going in that direction, but as of this morning, Trump has said that he's lost confidence in Putin, and therefore he wants to go in the other direction. Who are the banks that have cut? The Federal Reserve Bank has cut by 25 basis points. Now, yesterday, the Fed chairman, Jerome Powell, said that he still believes that there's a risk of inflation. Last time they met, he thought the risk was that of employment, but now he says there's a risk of inflation because the whole idea of tariffs has not kicked in fully. The Bank of Ghana surprised everybody in terms of bringing down their rates by 350 basis points, and inflation has fallen to 11.5. But please note that in Ghana, inflation went all the way to 54%. And for it to come all the way to 11% is 11.5 is significant. Why is it important for this audience? A lot of Nigerians have invested in Ghanaian assets, but Ghana is a more or less a dollarized economy. People bought Ghanaian bonds, and there was a haircut by a lot of people had to take some substantial haircut on that. The Central Bank of Nigeria cut by 50 basis points because of sustained disinflation and consistent exchange rate stability. So that's where we are. And so as investors, all of you who are on this call, investors will be asking yourself, where was I last time when we met? Where should I be going? And last time we said, look, invest in the US stock market, invest in the European stock market, invest, as you may, in the South African market, right? And be wary of investments in certain shady markets. But generally, the global markets seemed to be very stable. Now, when the rates were cut by the Federal Reserve, we saw on the 16th of September, it was 6.6, the S&P, and it has appreciated by 1.32%. Gold, again, has gone to 3782, appreciated by 1.53. So some stocks like Amazon, obviously for certain reasons, Amazon has dropped by 2.74. Apple has gained 7.53%. Microsoft gained 1%. And all of these are stocks that were in people's portfolio. NVIDIA, which is the big name there, has now agreed to invest $100 billion in Intel, the chip maker. And we've seen some of these. Oracle, the company that belongs to the richest man in the world, Larry Ellison, has gained 7%, while Tesla has gained 2.99%. So generally speaking, we think that there's a lot of room ahead for people investing in the high-tech sector. When I say high-tech sector, there's the digital part of it and there's AI. We saw that Porsche, the design company that stocks fell yesterday because Porsche is trying to get into the AI business with cars, but it's not happening. So generally speaking, that's what's going on. Another sentiment which is unusual is that the price of oil is supposed to be dropping. Trump made a comment that if the price of oil comes down, that Putin will have no choice but to come to the table. And that was different from what his position was some months ago. So if it's in the US interest and UAE interest, right, that the price of oil comes down, what will that mean to us in Nigeria and our Nigerian assets? Because we said earlier on that the price of oil, no, that the Naira is strengthening, inflation is declining, and the GDP growth, most of it centered around the price and production of oil. So Goldman is saying that oil could go to $60 a barrel from 68 now. IEA, right? The International Energy Agency is talking about crude at 64. Energy Information Administration from the US is talking about 59, and JP Morgan is talking about $66. In any of these scenarios, Nigeria would struggle a little bit, but right now at 66, 67, we're managing, and we'll probably be able to do something more relevant. Now, again, the implication, like I said earlier on, lower oil price means lower revenues. Lower revenue means increased government borrowing. Increased government borrowing means that the fiscal deficit as a percentage of GDP will increase. And once that happens, it begins to put pressure on inflation again, because the government will have to borrow. But since the interest rates have come down, the amount allotted for debt service by governments, both state and federal, will reduce. And if that happens, then you'll see the treasury rates begin to ease a little bit. Right now, the central bank has eased the almost market operations. So that by so doing, they have not borrowed that much, because if they borrow, that means they're putting money into the system. But if they don't borrow, they're not putting money into the system. Therefore, liquidity will ease up. So, global easing cycle in, Nigeria easing cycle in, more liquidity, capital markets respond positively to lower interest rates, and equities begin to increase. At the same time, strangely enough, the dollar appreciated, the Naira also appreciated more against the dollar, and therefore, if your assets are in Naira, you're okay for now, but you have to look beyond now to see what could happen in November, December. So why are we looking at some of those markets? One, the UK is very important because almost every Nigerian bank has exposure in the UK and have branches there. Therefore, we are seeing that happen. Nigerian banks, most of them are in Ghana. So whatever happens in Ghana affects the performance of the Nigerian banks. So we have that. We've noticed also that the price of cocoa has come down, and the amount of production of cocoa has actually reduced. Therefore, our cocoa earnings and our non-export cocoa earnings are, struggling and flatlining. Portfolio inflows, foreign portfolio investment inflows have come here because they have high interest rates. The exchange rate is appreciating. Therefore, they bring in money, make money, and take it out, and the return is far in excess of what they would have if they kept it in the European markets. So, to that extent, if you take our foreign reserves, which are about $43 billion, and knock off the $13 billion of FPI, which is not possible, but let us assume that all of it goes, that will be left with $30 billion. $30 billion will still give us about 6 months of cover, and then that means the economy will not tank because of that. But if the price of oil drops again, then we may begin to think twice on what to do. So what are the recent developments? You all know that GDP has expanded by 4.23, and the IMF has said that averagely for the year we're going to grow at about 3.4%, which means that they are optimistic about the outlook. The Purchasing Managers Index, which is a leading indicator, is also expanding at 54.2, and inflation fell for the 5th consecutive month. But if you take out the factors that could have forced this to happen, one being the drop in the price of petrol, two is the exchange rate appreciation. If that stops, then we think that the Nigerian picture of declining inflation may not happen that much. There's been a lot of spending by the fiscal authorities, and we need to look at that very closely. So, like I said, external reserves are $43 billion. Back out the foreign portfolio investments, it will be $30 billion, but we still have enough cover. The NPR is now 27%. We expect maybe another 1% cut in November, so that it will go to 26%. And that's if the Naira remains stable. If the Naira kind of wobbles, then instead of 1%, earlier, 0.5%. Fiscal revenues are up. January to August, we had we had 20.59 trillion naira. In 2024, at this time, we had 14.6, so it's up by about 41%. But if you dollarize that amount, you find that in reality, the states and the federal government are getting more money in dollar terms than it was. That was not the story in the previous year. In fact, the disbursements have gone all the way. It used to be 600 billion a month about 2 years ago. It's gone all the way to 1.8, and now it's at 2.2 trillion. But what are the state governments and local governments doing with the money? That's another story altogether. Total public debt, 121 trillion. It's actually 149 trillion now in Q1, indicating sustained fiscal pressure. Okay, so public debt now, if you take 0.5% of 149 trillion means about 149 billion if it's 1%. If it's about 70-something billion. So the interest relief, because of what has happened yesterday by the central bank, will be at least 75 billion naira. So the federal and state governments will have more money to put into the economy. Capital inflows increased to $5.64 billion, whilst FDI moved modestly. FDI long-term funding. So projects to refinance the electricity sector are things that are going to be good for the economy, because once electricity moves from 4,000 megawatts all the way to 5,000-6,000 megawatts, you see some improvement. Dangote Refinery is going on nationwide uniform pricing, and we'll see the effect of that. So generally speaking, the Nigerian economy is moving in the right direction, but only slowly. What are the indicators that we're looking at? GDP growth is up, right? From 3.13 to 4.23. It's about 1.1% better. Inflation is now 20.12, even though it's under the new methodology. The exchange rate informal has gone down to 15.15 parallel. And stock market capitalization is looking at about 91 trillion naira. So 365-year treasury bills are still at 16.20, and PMIs are projected to go to 55. Other indicators, NPR, gross external reserves, crude oil, we all talked about it, and the price of crude oil. So in all, 8 green indicators and 2 red. So generally speaking, it's a good thing to do. So this chart shows you the GDP. And what's the correlation between GDP growing and other economic activities? First and foremost, everybody in this room, you're either an investor, or you're either a producer, right? Or you are somebody who saves. So your savings function will change, your investment function will change, and your production function will change. So we see this growth, and there's a time lag between when growth happens and when the lagging indicators, like when employment begin to move. So we think that those things will begin to happen in the quarter ahead. And so financial institutions, and I'm using the word carefully because this is a asset management webinar. So financial institutions, if you're investing in the financial services industry, you have to look at insurance, look at pension, look at bank activities and non-bank activities, fintechs. So when you look at the data on the GDP, the sectors activities that expanded were insurance, financial institutions, telecoms, road, air, and rail transport, construction, oil refining, education, electricity and gas supply, and crude production. Those are slowed: real estate, food and beverages, trade, education, rail transport, right? And health and social services, forestry is slowed. So if I go back to the first thing, we had road and air transport expand, but rail transport was there and it can be on both sides. So I think that rail transport actually slowed rather than expanded. So it's road and air expanded and rail slowed. The ones that contracted were metal, oil, textile, motor vehicles, assembly, arts and entertainment. So we'll see, and that's Q2. Q2 is when the rains are, and so arts and entertainment does not expand at that time. So inflation, we saw core inflation down, which is the key thing. Food inflation down, right? And headline inflation, all those factors are down. Therefore, if it continues, we mean that it means that both structural and transient factors are now moving in the same direction. Now, Dangote refinery, we talked about that. No question, there's been a lot of pushback and fighting over unionization, but the truth is that there's nothing that can stop the Dangote refinery from producing optimally and also getting products across to the markets. Now, the gap between when we're looking at the foreign exchange market, and I think I want you to take a look at this because some of you are converting Nigerian assets to foreign currency, using the foreign currency to invest in international markets. So, but if you took money out of Nigeria at when it was 165 or 170, and you bought dollars at 170, you use it to buy international assets, and then you bring it back to Naira, and then Naira has actually appreciated. You may find that even though nominally you are making a gain, in real terms, you may be losing money. So the conventional logic is that always bet against the Naira because Naira will never appreciate against the foreign currency. Now that assumption is a very generous assumption now. Do I think that Naira will falter after a while? Yes, it's possible, but it's not a one-way street. In other words, don't forget that there was a time when the Naira was trading at 1,900 to a dollar, and now it's at 1,550. Nobody would have believed that in a year that will happen when the other way. So from a 70% devaluation, we're now having a 2 or 3% appreciation. Okay. So the EIU is saying that the Naira remains stable, and they are usually very negative about the Naira. So that's where we are. So we look at this, ask ourselves, there's a convergence, and the gap between the parallel and your former has narrowed to about 26 Naira. In fact, it narrowed to about 5 Naira some time ago in the last 2 weeks. So what are the factors? If you look at all the factors that will determine the exchange rate going on forward, there's only one that is red, that is the oil price. But it's critical. Production is green, but even then, you can say it's partially red. So the oil revenues are red. The trade balance is positive, about 12.37%. The current account balance is also positive 41%, right? And gross external reserves is positive, but even if you discount it, it's still positive. Inflow and remittances, right? It used to be $125 million, now it's $600 million this seasonality, and inflation is beginning to decline. Okay, so money supply growth, another factor that drives inflation, and inflation drives the currency. So we've seen money supply growth begin to get down to 15%. So the central bank is really ensuring that things happen that way. So these are the decisions that the central bank made yesterday, and really doesn't really matter. But if you look at the difference between Nigeria's interest rates and the US interest rates, the difference is 22.75 positive, right? So you're better off investing in Nigeria than investing in the US if you're in the money market. Inflation rate in August was 20.12 in Nigeria and 2.9%. So the difference between inflation rate and interest rates are positive for Nigeria. So in terms of taking your money from Naira to convert into dollars to invest in other markets, you have to be careful there. So the interest rate cut, if the refinery has, right? So the cost of, let's put it this way, we have the Dangote refinery, we have the modular refineries, and we have the NNPC refineries. The reality is that there's probably about $5 to $6 billion that will be saved just by allowing the Dangote refinery to do all that they are doing. And that $5 or $6 billion will help strengthen the Naira in the foreign exchange market. Okay. So one, we look at, like I said already, that national savings will drop because you have reduced interest rates. And so you consume more and save less. Demand pull inflation because money supply will begin to grow, and aggregate demand will. So you will have the president will make a speech on the 1st of October praising all the things that have happened. But in December, we'll look and we'll see how far. But generally speaking, the hard part is over now. It's the easy part that we're going into. So, like I said, the total public debt is about 747 billion interest savings because of this 747 billion naira. What is 747 billion naira as a percentage of, for FAC, right? A monthly FAC. Now this is annualized. So you divide by 12, right? 10, you have about 74 billion naira a month saving. It's not a big amount, but it is significant in direction. Okay, so key financial players, the banks, two things. One, the amount, the recapitalization of the banks, central bank is not going to yield on that. And so the banks that don't meet the minimum capital may have to look on how to combine, right? Insurance companies are raising additional capital, and therefore banks, insurance, and pensions are going to be, so additional capital means that they have enough buffers to protect themselves. So you may want to look at that. Asset management firms, I do know because they manage money on behalf of people and will have funds under management increase, right? And if straightforward deposits are not yielding as much, alternative assets begin to be the way forward. So all of these guys who are managing funds will now have to look for one, good returns, two, low risk, and three, forward-looking proposals on where those sectors are going. Fintech, again, increased credit appetite. We've seen a lot of money and a lot of advertising going into the fintech space. So, what do we see? Consumer goods and industrial. We think that because interest rates have come down, people have to buy more of those things because it's cheaper to take loans. So that's consumer goods and consumer preferences will change. Real estate will suffer somewhat, but even though interest rates have come down, we have not got to a point where real estate investment is now positive. Real estate today benefits from a lot of money laundering and other activities. So in spite of interest rates sensitivity, the real estate sector is actually growing very fast. Oil and gas, upstream, midstream, downstream, and now distribution to petrol stations. So that's where we are. And so if you are in equities now, the reduction in the interest rates probably means that you'll be looking for better yields. and moving away from bank deposits to more of equities. That will push up earnings. Push up the stock prices. But to the extent that if you look at what has happened, almost all the banks that raise additional capital are reporting earnings growth that is negative, right? And if that is the case, that negative growth means that the stock prices are going to be too high, and therefore, if anything, we expect banking stocks to crash in the next few weeks because there'll be no earnings or dividends to support its current valuations. So, but corporate earnings of customers of people that are borrowing, let us say, for example, MTN, Airtel, or Como and others, their borrowing costs will reduce, and therefore their margins will increase, and therefore we'll see a dichotomy. That is, the banks and financial institutions' earnings will drop relative to their price, while those who are in the real sector will have their earnings increase and their margins expand, and those prices will begin to go up. So the stock market capitalization will increase, but not in favor of the banking stocks. Okay, treasury bills, since the central bank and the federal government is borrowing less, there will be pressure to bring the treasury bill rates down. But if it goes too low, then the currency begins to suffer. Bonds, so there are corporate bonds and government bonds. But once the government bonds, which are the benchmark, the yields begin to go down, then all that corporate bond yields will actually begin to decline. Commercial papers are short-term rate borrowing, which will also decline. So you'll see commercial papers also drop in rates. So this is what we're talking about: gold, U.S. equities, Nigerian stock market, real estate, and treasury bills. That's a synthetic portfolio here. So what's the outlook? We think, like I said already, we think that this Nigerian stock market will show some increase, but we look out and be very careful about banking and insurance stocks and financial services. Those ones are going to decline. If interest rates in November come down sharply, then we may see that boost there, but we have to be careful here. So the banks that had what you call foreign exchange gains will now be reporting foreign exchange losses because the rates have moved in the other direction. So stability in the forex market means that the pressure on the naira is not going to be that much because people are buying naira dollars which they didn't need. Now they're all going backwards. So Q3, we think that GDP will decline from this current 4.2, maybe down to about 3.9, but bringing the average for the year to almost about 3.5, 3.6. The naira will trade at this level of 15.15 to 15.60. MPC will probably in November will depend on what we see. When we see inflation numbers, we'll be able to tell you what it look like. So the stock market rally will continue, but not in the financial services sector. Oil prices will drop, and that will put pressure on the Nigerian government to raise additional money. Oil production is also expected to increase, generally speaking. Thank you very much, ladies and gentlemen.
Hey, thank you, sir. Thank you very much. Wow. This is can you hear me?
We can hear you clearly.
Okay, awesome. Thank you, sir. Can you shed a bit more light on the asymmetric corridor that was reduced or amended? Yeah, amended. One was increased, one was reduced. Was minus 100 plus 500 to plus 250 minus 250. Can you shed a bit more light on the implications of that?
What it means is that the banks were lending money to the central bank and getting a return that is higher than what they're getting last week, and what they're getting now is much lower. Therefore, the banks have been encouraged to lend money to customers rather than lend money to the Central Bank of Nigeria. Central Bank of Nigeria is saying, we don't need your money. You can't lend to the real sector. That is one. So in that case, we are saying that monetary conditions are easing. There's going to be a lot more liquidity in the system. The risk is that if there's a lot more liquidity in the system, part of it will filter into the foreign exchange market and put pressure on the naira in the foreign exchange market. But generally, two things. One is that the central bank, the banks are now, how would I put it? The banks are being compelled, more or less, to reduce their exposure to the Central Bank of Nigeria and compelled, more or less, to lend to customers. Now, when you step back a little bit and ask yourself, the CRR dropped for commercial banks from 50 to 5%. What is 5% of total amount? So that means that there'll be extra liquidity from there. Well, and that extra liquidity, they say the banks don't bring it to the central bank, use it to lend to your customers. So it means that the lending activity, both at the consumer level, corporate level, and commercial level, will increase. And but at the same time, please mind the risk element, because if you, because of extra liquidity, throw more money at customers who are not deserving, you'll find that your loan to deposit ratio will change. You will also find that your what do you call it, your capital adequacy ratio will suffer, and you may not have the buffers. And the central bank is not likely to be giving forbearance as much as it used to be. So I think, generally speaking, that narrowing of the asymmetric corridor means there'll be extra liquidity, and you are not being encouraged to take it to the central bank and lend it to the central bank. You are being encouraged to lend it interbank or lend it to your customers at that time.
Awesome. Thank you. Before we take questions, I'd like to welcome our host, Ade Buraimo, for his comments. So are you there?
Hey,
Okay.
yes, just allow Oga to continue his question. I'll talk later.
Oh, okay. All right. So let's go to the questions. So somebody had a question wondering about the food and beverages sector that expanded in Q1, but then slowed in Q2. What would be the reason for that?
Expanded in Q1. Q1 is the carryover of the Christmas and harvest season of the previous year. Q2, technically speaking, I think is the planting season. And during the planting season, agric activity actually shrinks because you're planting. So you now wait for Q3 when the harvest has started, and we begin to see an increase in that. But also, there are some things that happen in Q2, the floods and the Mokwa floods and all the other things that happened, which had an effect on the cost of logistics as well. So now that those things have been sorted out, we think that food inflation begins to decline, right? But we've seen it, the prices are quite clear, that we've seen price of rice, yams, tomatoes, onions, and all of that have actually declined. So a couple of things that are happening: one, fertilizer; two, improved transportation; and three, there's the whole export smuggling of commodities to the neighboring countries. Because the exchange rate has appreciated, there's not an incentive to go and smuggle your cassava to Benin Republic. As a matter of fact, there's an incentive to bring cassava from Benin Republic into Nigeria. So you see, if you look at the state-by-state inflation, you see the states that have common borders with all these countries, I think Ekiti and Oyo, you see that food inflation, I think, declined, if I'm right. And that could be because of import smuggling rather than export smuggling that was taking place before.
Okay, thank you, sir. There's an interesting question here from Teva Kumeka. We actually discussed this yesterday. So the CBN reduced CRR for deposit money banks to 45%. On the other hand, it increased CRR for non-TSA public sector deposits in banks to 75%, therefore reducing how much of that money banks can, trade with, play around with. And the question here is, isn't that going to offset each other? The gains in reducing CRR on one hand, and then targeting increased CRR on a specific segment of deposits on the other hand, won't that create a zero-sum impact on the economy?
No, I think that question of non-TSA means that the non-TSA institutions, BOI, NMPC. So what they're trying to do, 75%, right? That means that only 25% of the monies available to those institutions will be in the system. All the others will be taken away. So it's not to wipe them out completely, but it's just to make it more, it's to tighten monetary conditions so it doesn't actually make the banks make these institutions to put extra liquidity in the system and overheat the economy. This is the problem that the central bank is trying to avoid, right? So I think that's the case. So how to track it and monitor it will be the major difficulty, because the money, let us say, for example, NMPC received 5 trillion naira, right? And if you got 5 trillion naira, 75% of that is probably about 3.5 trillion naira. When you take that, so only 1.5 trillion naira will be available to the banking system. So essentially, you have reduced liquidity. And don't forget, before, almost everybody, all public sector funds were in the TSA account, and that was not available. Now that everybody got exemption, whether capital territory, this and that, now they're trying to come back and say, no, everybody, whether you got exemption or not, only 25% of the funds you have will be available for lending and business activity. So it's a way of running these institutions, these non-TSA financial institutions in, so that the liquidity doesn't overheat the economy.
Awesome, thank you. Davis Abiodun has a question about the new tax reform policy on commercial banks and also for corporate organizations. What do you think will be the impact of that? I know we've already seen a situation where even short-term money market investments that were exempt from withholding tax has now been brought into that tax net for taxes to be paid on those investments. So Davis wants to know what will be the general impact of this of this policy on commercial banks and also for corporate organizations.
No, I'm not sure that. I think there's still discountable instruments and revenues from discountable instruments are still exempt from withholding.
For federal government, for example, T-bills, government bonds will be exempt, but every other thing you have to pay on.
Yes, but that's not new. That was already in place before now, right? So what they did was to encourage the non-bank financial institutions who were managing these funds so that effective yield and nominal yields were different. Now everybody's on the same page, and then like I said, it will increase the tax collection efficiency, right? And also reduce the return that people get. But as long as the returns are not because in the past we had 2-3% return, 4% return. Now we're talking about 16, 17, 18. So if 10% is the withholding tax on a 16% instrument, right? So it's 1.6% that I'll be paying as tax, compared to when I was not paying anything and I was getting 4% return, right? So 10% of 4% is 0.4. So I was getting 4.4, but now I'm getting 16.6 minus 1.6. So I'm still getting 14-15%. I'm better off in the current circumstances. So whether we like it or not, we will have to pay taxes, right? and we will have to ensure that those taxes are being well utilized. In other words, the government has to be held responsible to ensure that the money that is being collected is well spent and the people can feel the effect. Right now, people are paying taxes reluctantly because they cannot see the effect, and not just grumbling. They are now beginning to shout out. Right, so that's the situation.
Okay, when you say we hold them responsible, I was thinking, okay, how are we going to do that? But I guess we just keep shouting.
I'm shouting and, bring out your PVC.
Yes. Okay, let us welcome Ade Buraimo at this point, and then we'll go back to more questions after his comment.
Good morning, everybody. Thank you very much, sir. Thank you. We're always very grateful to you. We're very proud of you. I'm glad to be associated. We want to thank everybody. We're about 400 on this call, on this platform, aside the other platform. We want to thank everybody that continue to participate in this program. Our own assurance is we'll continue to run it on Wednesday, immediately after the MPC. And that has come to stay. Please update your calendar, your diary, and we'll stick to that. It will be very interesting and shocking to a lot of people to note that this group, we have 4 key institutions. We have a company called MBSL Main Street Bank Security Limited. That's our stockbroking arm. Please remember to patronize us. We have Alpha Morgan Advisory Limited. That is the issuing house arm of our business. It's about 8 years old. We can take you to the market. We can raise funds for you, and we can provide investment advisory. We have Alpha Morgan Capital, who is the owner of the bank. They are asset manager. They have funds. It was recorded a few months ago that we're actually the second highest return assets in the market. And finally, the bank. We want to thank the Almighty God for the bank. The bank is the flagship now. You can open accounts in 4 ways. You can use the *734. You can use the QR code. You can visit any of our 14 approved branches everywhere across the nation, and we'll continue to provide satisfying banking. We have a lot of money to lend. If you need support for your business, we're a new bank, will support you. Once again, I want to thank everybody on this program and thank our speaker too, as we go into the second phase of the question and answer. Thank you so much, everybody. Dorian, thank you. Thank you, sir. Thank you.
Thank you, sir. Okay, let me go back to the questions. Israel is concerned that the reforms of the current administration have been successful at the macro level, but these macro successes seem to have failed to translate to micro gains for individuals and businesses. What other reforms do you think need to be pushed to have a win-win both at the macro and at the micro level?
I don't think it's about reforms. I think it's more of the policies have been announced. There's a transmission timeline or lag between when policy announced and when the effect is felt. So what you're seeing now is that if you look at 2023, when they announced subsidy and exchange rate unification, that year was a disaster. Everything, if you look at all the numbers, showed negative outcomes. 2024, central bank reined in interest rates, and the pain was still there, but the people were feeling it. They're feeling the pain, and we're not getting the benefits. It is in 2025 that we are beginning to see a kind of recovery, and slow but painful. And now this is the time. That's what, when it talks about the macro and the micro, it is just a lag between when you institute policies, when you reform the institutions that will implement it, and when you begin to feel the impact. And impact is one thing, and the belief. If you are saying all this data like looking, oh, now inflation is down, blah blah blah, the ordinary man on the street is not feeling it. As a matter of fact, he gets more upset when he hears all of this great news, and he's not feeling it at all. So there's a lot of work in terms of communicating, and it's the big difference between propaganda and analysis. Evidence-based analysis is not propaganda. You can feel it. And so if the exchange rate today is at 15.11, 15.15, and it was 19.10 sometime last year, that is clear. You don't need to be a rocket scientist to know that you have actually that the exchange rate has appreciated, and therefore all these things can be felt. If you bought some of those stocks last year when the exchange rate was this low, it was that high, and now it has appreciated, and those stocks are beginning to do well. You ask yourself, okay, I bought MTN, and MTN reported losses in 2023, 2024, and MTN in 2025 is going to be reporting profits, and therefore I will get my dividends, and I'll get all. Then that becomes clear. So I think there's a time lag issue, and secondly, there's the question is the revenues that have been collected by the government, how is it being utilized so that it can be recycled back into the system and has an impact? So that is, so my view is that there's a little more pain, but more of gain, and the gains are going to be happening be more visible as we go into the end of this year, for two reasons. One, the lags are going to win, and secondly, we are going to a political season. Therefore, the government has no choice but to ensure that these things translate and get to the masses. Failure to get the benefits to the masses will be politically catastrophic. But I think the guys who are in charge of the political programs are fully aware of the fact that what has to be done has to be done, and it will be done properly.
Awesome, thank you. Now, Frank Agbogun wants to know, concerning the agriculture growth rate level, as we've seen in this current GDP figures, is that it's massive compared to what we've been used to. Is this seasonal, or is this the beginning of real improvement in farming? And I might add, considering the existential challenges that we have in terms of, road network, insecurity, all of those things, flooding.
No, I think there's something fundamental about agriculture. One, like I said earlier on, there's a question of export and import smuggling. One. Two, if you look at Dangote says it's earning $3 billion a month, right? From fertilizer exports. So there's massive increase in the production of fertilizer. There's also seedlings. There's also stability in the exchange rate, so the incentive to actually smuggle out. And then there's the seasonal factors. But having said that, you have to look at what's happening. We saw, and one interesting element is to look at the price of eggs. Eggs got all the way to 7,500 for 30 eggs. It's now down to about 5,500. Look at that. Look at the price of plantain, which got all the way to 8,000 for a bunch, and that is now down to about 6,000, lower than that. These are things that people consume, right? And we are seeing that it is not, there's part of it seasonality, part of it the technology, and also part of it the exchange rate appreciation, which has reduced the incentive to smuggle out of this. So it technically speaking, the agricultural production index has actually increased. And when you look at things like aquaculture, look at animal husbandry, right? Look at chickens and eggs, and look at the feed component. You'll find that, generally speaking, there is a good story in the agricultural sector, right? And agriculture does not thrive when interest rates are very high. So if we've seen a reduction in interest rates somewhat, and we are beginning to see this production changes in the production function, it's likely that you continue to see this harvest and non-harvest. And the whole idea of logistics costs, because there's production of the farm products, storage of it, and transportation to the final markets. Those things are changing, whether we like it or not, in such a way that we are beginning to see the impact. So, Frank, the truth is that, yes, the agricultural revolution, or agrarian revolution, is taking place, but the impact of it will be felt more as we go into as the transportation and logistics cost comes down and the storage, I think. But we have seen massive investment from the private equity funds in breaking down agricultural production into various components, and we are beginning to see the impact of it.
Okay, thank you, sir. Obviously, we always have more questions than time, but on your closing thoughts, before we receive George, I'm just going to lump 3 questions in one from Olani Kehinde, who wants to know what your growth expectations are for technology and entertainment sector, and what do you think is this relative stability we have in the FX market? From your vantage point, what do you think is the biggest sustainability risk, and what are your predictions for interest rates in banks in terms of interest rate deposits, bank deposits?
I think bank deposit rates are going to come down because if inflation is at 20.12, let us assume inflation reduces to about 19%. Then you'll find that bank deposit rates are always lower than the rate of inflation. So here people are getting 15, 16, 17 under the managed funds products will come down slightly closer to the rate of inflation, maybe around 17, 15. The exchange rate stability we are seeing today is driven by, you see, when you do the PPP evaluation of the currency, it gives you about almost 1,200, 1,300 naira per dollar. Then you add the 25% premium for frontier currencies. So that comes to about 1,500. So every time Central Bank of Nigeria allows some flexibility, it makes the naira to strengthen. Let me give you an example. Nigerian banks are now allowing you to use your card, your naira card, in international markets, as long as you don't spend more than $1,000 a quarter or something. That means that if I'm traveling tomorrow and I'm going for only a week or two, once I have my naira card with me, I can use it to enter an Uber or do all sorts of things. So it reduces the demand for forex in the private market here. Right? 2, all these questions about IMTOs and monies coming into Nigeria have changed, right? So if you now have all of this dirty December people coming in to have their concerts, they bring their money, the Wizkids, the Burna Boys, and all of that, Ashake and all that. They are bringing their dollars in, right? And that improves the flow of dollars in the Nigerian market. So you have to put combination of things that what is the true value on PPP basis, which is 1,250, 1,000, maybe 1,300. Then the malams and all of that at their premium. So it can go all the way to maybe 1,400. Anything above 1,400 would appear as if the currency is being undermined by the structural factors. Central bank now says, okay, no problem. You can use your naira cards overseas. You can do this. You can remit money and all that. And people now know that they can get their dollars when they want it. So rather than buying dollars that you need in January, in September, you are now waiting until December. The risk is that if everybody goes to buy the dollars at the same time, then it could push the currency, tip it over. But I doubt it, because with the reserves the way they have, gross external reserves, with the diaspora bond that has been issued, with so many of these things, I think that there is a possibility that the currency remains stable. And once the currency, which is the main variable in this economy, if it is stable, every other factor will be stable. I think that's the important thing. So our view is that between now and December, except the price of oil catastrophically drops, say, to $50 a barrel, we should be able to manage and get away with this between now and December.
Okay, awesome. Thank you, sir. I'm going to welcome George, but there's a burning question somebody's begging me to answer from Mr. Olufemi Ayeni. He says, the current relative stability in the FX market. Okay, you already answered that. I think you did. Yeah, that's what you just answered. So thank you very much. George, over to you. Is George there? Thank you, sir. It's always such an amazing time listening to you. The questions are just coming in torrents, but we can't take them all. So let's welcome George for the closing remarks.
Thank you, Doyin, and thank you, everyone. On a general note, I want to say thank you to every one of us that have been part of this program and the success of today. We want to especially thank our special, distinguished, renowned, and erudite speaker. You know, I will always call you Prof. Makrewani. With your oracular or binocular lens, you have always predicted what the outcome of the next quarter will be. And what has happened today is a confirmation of that. Almost everything you predicted in the last edition has come to pass. And I want to thank you for your renewed commitment to this program. Every time we call on you, you're always there, and you're not just there, you commit your resources in all areas to ensure the success of it. And you unreservedly give us everything that we all need to have clarity around the way to go. We don't take this for granted, sir. Thank you very much. We deeply appreciate you and what you do. And then our Managing Director, Mr. Ade Braimon, who has regularly supported this program, and today you made a further commitment to make it more regular than before in terms of when it comes on. It used to be quarterly, now it's going to be every two months. That is an additional commitment of resources and effort. Mr. Ade Braimon, we say collectively from all of us that God bless you and renew your strength and make it you glow and glow and glow with grace to the extent that you are not just doing this for humanity, you continue to be rewarded by God. Thank you so much. And those that make this program exciting and very rewarding to every one of us, and that is talking to our distinguished and inestimable audience. If you look at the current of questions, Doyin could not exhaust everything. Yeah, and it's still pouring in even as I'm talking. That shows the excitement you provide for this program and all that you do to ensure that everything goes well and make it lively for us. We do not take it for granted and want to thank you for always being there, for being a good participant, very engaging program. And we say, God bless you. And I want to assure you that Wednesday, immediately after the next MPC, we'll be here live and direct, God helping one of us, every one of us. And on that note, ladies and gentlemen, we say, God bless you. And from AFAMORGAN Group, and we say, God bless you. Keep patronizing AFAMORGAN in all directions. The MD has said all the product offering we have, patronize us. And don't forget what Mr. Bismarck Rewani said. The Nigeria economy is improving, though very slowly, and the pointer is to the equity market. And MBSL, our security trading firm, is there to help you to navigate what to do in terms of making investment in equity. Thank you very much, and God bless you. Looking forward to seeing you in the next edition. Thank you.
Thank you, everyone.
Thank you, Sauda. Thank you for your time.
Thank you. Take care,
Bye-bye.
everyone.